Okay, good morning, everyone. Today's date is the 14th day, Friday, the 14th day of July 2023, and I'll be talking about US oil today. It's been long. I talked about US oil. I've been trading other assets, but I think I'll be trading US oil this week. What I think I'll be looking at it, and what we usually do first of all, I'll start by looking at the fundamentals coming out of US oil. We do shout out to investing.com for this great opportunity of using GK as fundamental news. So I'm looking at US oil, then what do I have? I'll search US oil. Okay, I think I have US oil. Yeah, yeah. Looking at US oil, WTI, US oil. So looking at the fundamentals coming from US oil and aside from that, probably let me use my economic calendars first to see what happened this week on US oil, and probably we'll have anything that might propel us on US oil. So this week, crude oil inventories. Let me look at the crude oil inventories from this week. So we have some data that came out of crude oil inventories this week. I didn't look at it much because I was trading other assets actually, and I tried to. So the last was New York session, New York session changed to I think 1:30 p.m. beginning of the New York session. Let me switch to trying to switch to Nigeria, Lagos time zone. So this week, think on when was that? This week, Wednesday, yes, Wednesday, that was 2 days ago. We had some crude oil inventories, and that was around 3:30 p.m. So let me open the first one, which is the crude oil inventories, and we had 5.94 million barrels or something like that. So let me read this out. Let me be vocal. The Energy and Information Administration (EIA) crude oil inventory measures the weekly change in the number of barrels of commercial crude oil held by US firms. The level of inventories influence the price of petroleum products. If increase in crude oil inventory is more than expected, it implies weaker demand. Are you getting it? Look at the forecast. It implies weaker demand and is bearish for crude oil. If the same can be said if a decline in inventory is less than expected. If the increase in crude oil inventory is less than expected, it implies greater demand and is bullish for crude oil. So this was the reason why we had a lot of rallies. So aside from that, I was looking at some other news that came out also. Oil prices hit a week high on tighter inflation. So probably if I open this up 20 hours ago also, that was like 2 days ago, yesterday, sorry, we had crude oil stabilization. So I'll just run through this within the next 1 or 2 minutes. So oil price hit 10-week high on tighter supply, soft US inflation. So if I should look into this, you see that on Wednesday, news came out. When was this news released? I think published yesterday, 10 p.m. yesterday night, so 8 hours ago. What you can see here is that oil prices rose in Asian trade on Friday, hovering near 10-week high. That's early hours of this morning, hovering near 10 weeks high on the prospect of tighter supplies amid disruption in Libya and Nigeria. And there were some news that came out of disruptions of that as in Libya and Nigeria some days ago, as in 2 days ago. So I think while data show a drop in US inflation also supported sentiment, while crude oil rallied up. So it's important that before you trade an asset, first of all, find out the behavior of that asset within that week, that month, or that particular time frame so that you know to give you a direction of what is happening. So crude oil market, like the second paragraph right now states that crude oil market rallied this week, tracking decline in dollar. As you can see, dollar has been falling, and soft data is coming out from the dollar. I think in the month of November, October, November last year, was talking about when Jerome Powell talked about they tightened from the month of, I think, May, June, July, August, September 2022, October 2022. There was serious hike, and coming into this year, November, at the end of November, December year last year, we had Jerome Powell, the president of the Federal Reserve, talked about, reducing or bringing maybe 0.25 basis point, which is a softer data that will make the US, what's it called, US dollar fall, and which you've been saying, and which I told that will give rise to assets like, what's it called, Euro USD from 0.55, Euro USD went to 0.5500, something like that. Right now, you can see that Euro USD has done more than, I mean, 1,000 pips, 9.5 went below $1. Euros went below $1, but right now, it's real right now. So, they have been, to tame inflation in America. I think the Federal Reserve have been trying everything they can to, reduce, what's it called, the tighter, the tighter rate hike they have been having. So the softer data that have been coming out from US actually broke this resistance, which is actually helping, what's it called, the US oil rally right now. So let me finish the fundamentals before going to the chart itself. So crude oil market rallied sharply. I think I'm fast, but I need to be fast so that this video not be too long. So just if it will take you to, watch over and over again, please do so that I can speak faster and we should be able to, get to where we're doing here. So crude oil market rally sharply this week, tracking decline in US dollar as I explained before, as softer than expected US inflation data spot bet that the Federal Reserve was close to reaching peak interest rates. So, the news coming out from what's it called, the rate hike, the previous rate hike. I think if I should go to global rate something global rate something global rate. Where do I check this? I can search that. I can have that. Okay, I'm trying to see where the US like interest rate in America right now. Interest rate in America. Okay, the interest rate in America right now is 5.250 basis point, and I think is like explained in these like explained here. Crude oil market rallied sharply this week, tracking decline in US dollar as softer than expected US inflation data spoke bit and the Federal Reserve was close to reaching its peak interest rate. So they intend not to increase the rate at which the hikes on the US interest rate. I believe you understand what I'm talking about. I'm being fast, that's why you see that maybe I'll be having some glitches in bringing out. So that's what happened since November of last year. They started, we had Jerome Powell speak last year in his remarks that there will be softer, there will be dovish. He gave some dovish remark that actually made me to start saying that yes, there will be Bitcoin, US and indices like Nasdaq rose all the way from 11,600, and you can see Nasdaq at 15,600 right now, over from 4,000 pips to the upside, and GBP USD, Bitcoin itself, Euro USD, and all of them started rising since then, and still till now you can see here that there are softer data coming out because they are reaching the peak of interest rate rates. Brent oil, which is the US oil future, rose. No, what's it called? Brent is the UK oil. Future rose 0.3 to 81.5 a barrel, while WTI Texas crude oil rose 0.3 to 77.1 to a barrel by 2056 Eastern, that's 156 GMT. Both contracts were at their highest level since last year, April. And we are set to rise between 3.8 to 4.5 this week, their third ever straight positive week. So Libya and Nigerian disruption add to the tighter supplies, demand seen improving. You can see that there are some kind of economic activities that has happened in Nigeria, my country, and Libya that blocked what's it called, production, or probably many other reasons which I can't find here, I can't have for you here right now, so that I'll not talk at a point. So several Libyan oil fields, including the country's second largest Rara, were shut down on Thursday amid protests by local tribe over kidnapping of the former minister. So that made demand of crude oil to increase because there were no oil coming out from these countries. And separately, British oil and gas giants Shell PLC suspended crude loading at Nigerian Forcados terminal due to suspected pipeline leaks. There were no oil coming out from Nigeria and Libya, so that when there is high demand, what happens to the asset? The asset goes up. When there are so many suppliers in the market, what happens? The asset comes down. So we'll put that into this particular US oil we're about looking at right now to see where we are and if the oil will continue rising. So the disruption in supply comes to the heel of deep production cuts. That's the next paragraph now. The disruption in supply come on the heel of deep production cut by Saudi Arabia and Russia and point to tighter oil market in the coming months. They also come as the Organization of Petroleum Exporting Countries, OPEC, flag higher global oil demand in 2023. You know what I mean? They also come at the OPEC flag higher global oil demand in 2023. In its Monday report released on Thursday, where I'm going from here. This was accompanied by data showing that China, the world's largest crude exporter, saw close to record high oil imports in June as refining demand peaked up in the country. So I'm coming from somewhere, and there are two people that will watch this particular video and they will understand, wow. So this is what you were talking about last month or 2 months ago. Everything that you see happening in your chart are different news they put together before they will determine if the price of oil should do what, go up, or price of oil should come down. So if you are a chartist or someone that knows about these charts very well, just looking at the chart, you should be able to determine whatever happened during that session. So if I'm an oil trader, definitely I would have made over, like, let me say, over like 10,000 pips from US oil. Is it 10,000? 67 to 77? That's about 10,000 pips in oil, because if you were to calculate that in US oil, hold on, coming. If I were to calculate US oil, that so starting from 64 to, let me just say 67 to 77, just within 1 week. That's, to calculate that, that's over how many pips? So one lot, if you bought 1 barrel of oil, 10 barrel of oil by, that's how many? $100,000, sorry. Okay, open price 67, closing price 77. So if you, why the basis, the reason I'm doing this, the reason I'm actually doing this, that's 1 barrel. If you have bought 1 barrel, 1 lot, whatever you call it, you have made $10,000. The reason I'm doing fundamentals today with the technical analysis is because a lot of people just open their chart and jump into the charts without really doing proper analysis or proper. Shout out to my broker, OctaFX. They've been helping with these great, amazing tools they have. And they, from analysis, from news, and every other thing, and investing.com, also globalry.com. Kudos to you guys for helping me in my journey. So this, like I'm saying, before you trade an asset, you should know the fundamental news coming out from that asset already, the sentiment analysis also coming out from that asset. And from where I'm seeing right now, conclusively, US oil is about to rise because there have been, the supplies are little while the demand are growing. Nigeria right now having issues, like you have just read from here. Libya having what's it called, issues of also exporting also because of one of the finance and their minister that was kidnapped or something like kidnapped the former minister. Russia and Saudi Arabia and point to tighter oil markets in the coming months. So they'll be tightening their export rate in the and where you saw that the OPEC flag higher global oil demand in 2023. Are you getting this? So there will be higher demand of crude oil in 2023, meaning that, and according to law of economics, when the demand is very, very, very high, the price of that particular asset does goes up, and when the supplies are very, 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 very much in the market, it goes down. So this is about pouring um, a very high demand in US crude oil and Brent crude oil, and I'm particularly seeing about from where we are right now, 77 to that's about 50,000 or 40 something, 43,000 pips from US oil going to $120 as a record high because of oil that is about going to the demand. The supplies are going to be little while the demand is going to be high. So I'll from there right now close this sentiment and fundamental analysis I'll be doing here. Probably just read a few more lines, then go to the charts and plot it out to see whatever is happening. So but fuel demand in China has remained languid. Where did I stop? This was accompanied by data showing that China, the world's largest crude exporter, saw close to record high oil imports in June as refining demand picked up in the country. But fuel demand in China remained languid, casting doubts over whether the country will drive up global oil consumption. So someone asked me that to be a trader, do you need to be an economist? Very, very important. Do you need to be a psychologist? The most important part of it is the psychology itself and the economic part of it itself, because whether you are trading is economy, whether I like it or not, be you a crypto, be you an indices, be you a currency, just be you a stock trader, be an ETF trader, you are an economist, whether I like it or not. So it's important that you know how to, go into this fundamental analysis itself, study the behavior of that particular asset, what has been happening in the past 1 year, 2 years, 3 years, over time, transfer that to your chart so that you don't make mistakes. So if you are someone that is investing for a very long time, you should know that you are buying from this particular, I'm buying crude oil 65 dollar per barrel. I get now, I want to sell probably $70 per barrel to make some amount of money when you use your, what's it called? Probably you bought at $65 per barrel and you intend selling when crude oil hits $100 per barrel. Are you getting it? So if you buy this and you buy 1 barrel, you know that you are making $35,000 when crude oil hits $100 per barrel. So psychologically, this is how to trade, even without looking at the charts, because you want to buy something cheap and sell when it's high. So you don't even need to buy oil physically. Here right now, you can be an oil merchant by buying 10 barrels of oil, keeping it, and you probably, if not for brokers that are giving us enough leverage of 500 and 1 to 500 risk to reward. So I say 500 and 500 leverage to trade US oil. Buying that, you would have made about 310 barrels would have given you 350,000. If you buy at $65 and you hold it to whenever it gets to $100 per barrel, you're making $350,000. So you don't physically need to own a filling station in Nigeria or anywhere in the world before you can trade US oil. That's the basis of this video. Are you getting it? So I know by this kind of ways, YouTube checking my algorithm and the way I'm uploading, with time, my YouTube channel will blow up. So I will encourage everyone, each and everyone, to go to my YouTube channel. I'm uploading this right now, share and, educate people on how to actually trade the financial market so that you'll be profitable. That's the only way you'll be profitable. It's just common sense. Trading is common sense. It's not be really that you must be a sharpest first before you become a better trader. As you can see, US oil is currently at $76.80. Is it going to rise? We're about going to that right now. Enough of the, enough of the technical analysis. So as you can see, what we have here in our chart, everything that's been happening in US oil since 1986 till now, are you getting it? I have them in the chart and I can tell you categorically where the charts are going to by using market structure to determine what has been happening. So if I should start my technical analysis from here, this was the last high we had on US oil since then. So this is my monthly, the last $145 per barrel. US oil went to $145 per barrel in the year Monday in the year June 2008. Go and look for year June 2008, and the bank financial market crash of 2008 brought US oil down all the way to $3. So there are a lot of factors you can put together to be very, very good in the market. So since then, what do we have? We had a major area of value that US oil had been coming to, and this was my last major area of value. This is not a value yet, area of value yet. Why? Because an area of value is an area where you have multiple touches. I get it. So you should understand that. You should not write that down today. An area of value is an area where the price of an asset came to multiple times and we did not break it, or we broke it, or we came to multiple times, not even break or retest or something. Multiple times. Let me use that word, multiple times. So US oil came in 1990. In October 1990, we couldn't pass there. The price couldn't pass there. Go and look for the reason why on Google is there. Then in the year 2000, 10 years later, it came back up to $36. The price couldn't pass there. It found resistance and came down and finally broke it in 2004. Then the market crash in 2008 brought it back down to $36. And you can see that when we came back to $36 in 2016, we held it and we came up. But what happened? Coronavirus crash in the year 2020 actually brought it down to almost zero, because everybody thought the world was going to end. But after coronavirus started recovering, US oil started recovering and went all the way to $130 per barrel. What could not be accomplished within how many years? Let me see. From the year 2008 to what's it called? From the year 2008 to 2020, 12 years, we recovered in just 3 years, 2020. Is it 3 years? We recovered in just 2 years. So that is to tell you that for US oil to recover like that, that means that was after what's it called, coronavirus, it was high demand for crude oil. So that's to say that where we are right now is that when crude oil started coming back up, if we should draw a trend line connecting the dots, so I was able to find what's it called, a descending triangle that is a break and retest to go to the downside. But you know my strategies here that if we reclaim a particular broken area, so a structure before, this was a previous resistance, now turned support. We broke back into it. So this was just a fake out. And as you can see, there was a morning star, a large morning star there. So these are things, footprints you should look at before trading any particular asset. Don't just enter any market without finding out what is really happening in that particular asset. So when we did that, we were able to break out of these ascending channel, changing character to the upside. I guess two of my students know what I'm about doing here right now. So since we changed character to the upside there, we are able to break above. So I was expecting us to do a 50% retracement to the downside, which you can see that we've done perfectly well. Well, I don't just trade from that retracement. I still need to understand your character internally within here before I can start trading. And this is a monthly. I'm just doing a monthly analysis for you. This is a monthly. I don't use a monthly to trade. So what I usually do then is that I go to my lower time frame to find out. But before then, if truly we stopped at 50%, we will know on the lower time frame. That's where you now start seeing what your asset being opened up. So I move to the weekly. So on the weekly, you can see that previously we were having on that major area of value like we had on the downside and at 50% retracement levels already. So I've labeled this an area of value. I think I upload that video I did with my students. I think it's in my video. I think in the month of from March to June. Go and look for any video I did on US oil, or probably a training session I did on US oil And what I have here right now as an investor, my first mind is an investor's mindset. And this is the weekly for US oil. So I'm going to look at the demand, and you can see that according to price action perspective, if we know that this is 0.5 already, so I'm going to take this off to keep my chart clean. So when we broke out of this particular demand, this was the previous resistance, and we broke out of that particular ascending triangle, which switched the market to the upside. So this was the previous resistance that we broke, and we had came back and it became support. The supply of crude oil could not pass, I think $64 again, and I was expecting that. So if that place is an area of value, let's come down there and bounce, and that is exactly 0.5. We shall have up to like how many conferences right now, breaking out of a chart pattern, which is an ascending triangle, breaking a major structure at the upside, which made a change of character back to the upside. So we have to retrace back to the downside to come back to a major area of value, which is the previous resistance non-turn support, and at the neckline of that, what's it called? So if truly this is the US oil, the demand of oil is going to bounce from here, and the demand, what's it called? The demand of oil is going to be very, very high, and what's it called? And US oil is going to go higher because of news or fundamentals coming out of this country right now. That means that we use a price action perspective to drive this market, and what has been happening throughout. You can see that I use my RSI also. You can see that when the prices were coming down, are you getting it? What's it called? We were having a divergence in the demand was going up. The demand, or I use my RSI to find the divergence between two assets. Are you getting between an asset? So when the price was coming down, the buying momentum was going on. That is telling you that we are about reversing at a particular major support. So I didn't start buying also because there was a consolidation throughout the month of what's it called, May, and May to June, to the end of June. I'll show you that on my file chart. I'm just trying to break this down for you. And if truly, let me give you something else to take on today. You see this rally you are seeing here, this is an uptrend. That tells you that the market is still on the high rise. But after a break of structure, if you are seeing baby candles coming down, that tells you that this was never a change of character to the upside. But when you start seeing from all the way from 30th of May 2022, you saw the whole 1 year, US oil was struggling and there were no supplies. That's to tell you that it might be take profit or a retracement. I call this a retracement because the momentum it was using to come down was too very, very sluggish. They were still buyers, economic activities. This weekly, week 1 week, you've seen the candles very, very, very. When you go here, first consolidated between December all the way to March before we came down to the main support, consolidated. So let me just say the consolidated started from December of 2022 all the way to June of 2023. So right now, this higher demand new that is coming out right now, is it taking us to the new, what's it called? The new area of value of 140. That's what we're about to find out, because once this market switch to the upside on our lower time frame, we'll enter, and what we'll do at VisionX without a switch back to the upside or you change your character back to the upside and a retest, we take conservative entry. Those are the criteria we use. So we first of all look up to like 5 to 6 confluences, and lastly find a switch, if at least on the 4-hour chart, before we can start trading. We don't trade 1 hour switches. We trade higher time frame switches to the upside, or we call it a change of character, whatever it might be. So since we had that the market was coming down to a particular area of value and the buying momentum was rising, which is a signal again, which is a divergence, which has given us up to like breaking out from an ascending triangle 1, changing character to the upside 2, coming back to the previous broken structure to find a support at this area of value 3, then divergence happening where the price was coming down and buying momentum was going up 4, then we're about having a change of character or probably change of character 5. So those 5 confluences are enough. So I'll leave the weekly, take this off, and go into it properly to see whatever is happening. So we can't use the weekly to see whatever is happening right now. We have to go to the lower time for probably the 1 hour time frame. You can see that this market was doing well, trending properly to the downside. So we are still in a bearish breaking structure, breaking structure, breaking structure, breaking structure, breaking structure. So if you've been holding or you've been trading this, you would have been making money on a downtrend before getting to a particular area of value, which is a support. Turn to on that support, and you can see all the bounces happening. So what has been happening? If the daily is not giving you, don't drop less than the 4-hourly chart. So that's what I'll tell you. So I'll drop my 4-hourly chart, which I use in trending my market properly well. And what can you see? The last area of value we had on that 4-hourly chart was this supply. Was this area of supply, support that broke and turned into a resistance. So as you can see, look at, as you can see, what have you seen now? So I told my students, I think in the month of May, that the difference between the upside and the downside right now from demand of crude oil going up is this consolidation that's been happening. So this is the reason why we've not been trading crude oil, because we don't know what is happening. So you can see that in the month of June 29th, about 15 days ago, that was when this demand started coming out from crude oil. So if you were a US oil trader, are you getting? You would have seen that there were demand, what is it called, support around these areas. So you should be looking for a bounce from this area. If you have been buying from $66 area, you would have been able to cash these 1,000 pips. It's gone up to the upside right now. It's 1,000, 10,000 pips. Let me see how many pips. 66. 66 to 76. Where we are right now. If you have bought 1 barrel or 1 lot, you'd have made $10,000. So that is 10,000 pips to the upside. Is it 10,000 pips? No. Don't mind me. Sorry, let me check this calculation sometimes. That's 1,000 pips because one movement is $1,000. So that's 1,000 pips. So that's 10,000 pips to $76. Right. That's 10,000 pips to $26, which is $10,000 if you hold 1 barrel or 1 lot on crude oil. So if I go back to my crude oil right now to finish this video, you see that you have to do, if you do a proper analysis and a proper research on your asset, you will definitely make that asset. So we have 5 confluences already. Are you getting it? And the 6th confluence is that this was previous support when we were coming down. It turned into resistance that would now broken out from. So hence that is making up coming back to 72 or 74, or from 72 to $74, and we're finding on that switch again, probably on the 1 hour time frame. Buy, put our stop loss under, probably take a $3,000 if we're using 1 lot, trading, probably using a $5,000 stop loss, then aiming all the way from 70, let me just say 74 conservative or 75 conservatively, all the way to, I don't care how long it's going to take, but it depends on how long we're going to hold, all the way back to the 100 previous high, which is, if I go to my previous high of $120. So if you are to bring this here right now and say that taking a trade from $75 to $120, so, and if we're taking from $75 entry price, $75, then profit target $120, then our stop loss, sorry, 120. Hold on. 20 as our profit target, then our stop loss will be, so if we're risking 70, okay, let's go 70. Stop loss will be 70, that's we're risking 5,000 pips. I guess our risk will be 9. How? Because we are about making about 10,000 pips if we are to, as investors. At VisionX, we are mostly investors. That's why we take longer time to make profit. But just imagine that we're investing $75 all the way to our next high, and it takes us even 6 months to $120. One lot we're buying and holding 1 barrel of crude oil for that long is $45,000. If we're able to buy up to 10 barrels and hold it for as long as we can, it's $450,000. So this is how I trade the financial market at VisionX Limited. So from here right now, if truly this is gonna continue, and as you can see, this is a very, very, very big height I want oil to break, because right now we're at the internal. So my first take profit will be from 75 all the way to 3,000 pips. So if I'm holding, first of all, I might take this trade from 75 to 83 or 82. First of all, $70,000 with 10 load, then I can leave the rest to run to the new all-time high. Depends. So you should be watching your markets, your demands, your supplies, any news that is coming out, your crude oil inventories, follow your economic calendars using investing.com, which is my preferred, or FS books. There are a lot of them that you can use. So if I have this right now, and I'm risking these 5,000 pips to make about 45,000 pips, that's a very good risk to reward ratio, even though it takes me 1 year, at least $150,000 in 1 year, or $45,000 in 1 year is very, 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 very good as an investor in this business. So this is what I have for you on US oil. So I'll still be on my 4-hourly chart, and I'll try to find out whatever is happening. So before going to my 4-hourly chart, I think I have something I need to look at on my daily chart. So on my daily chart, I have something I call connecting the dots. So when we broke and switched to the downside, hold on. When we broke structure and switched to the downside here, you know how we do it at VisionX. This was a previous high, support, turned what? A resistance. So I should know that for us to break all these support, previous resistance, now turn support, and break this support and break to the downside, the market will definitely come and retest. And if you retest 2 times, break structure to the downside, this was your perfect entry, and this is your first entry, this is your second entry. This will tell you that the market has done what? A double top, and the market has done what? Switch to the downside. I usually tell my students this, that you should wait for confirmations first before you take any trade. Are you getting it? So the first confirmation we had was this switch to the downside. Are you getting it? So we broke to the downside, we came back twice, we couldn't break. So the market came, like what happened to UAUD that made us lose that trade. Look at, are you getting it? That made us hit stop loss. When it went up again, it broke down, switching character to back to the downside. So upon this retest, you should know that this market will definitely on to the next major area of value at the downside. Are you getting it? So the market travels to resistance, travels to support. So if you know what you're doing, you should not be scared leaving your trades, unless you're seeing that if you have entered this trade from here, your stop loss is here, it's not coming back to hit it anytime soon until we hit our major resistance and switch again, like it's switching right now to come and hit it. So these are the 2 major levels I'm looking out for. So let me take all this off. Let me tell you the major levels I'm looking out for in this chart. So I can bring that back. 2 major levels I'm looking out for is this one. This is the second one, but the first one will be a break above this high previous, what's it called? Previous resistance. We've broken this first one right now. I'll be glad if we can come and break $83 level. We test a particular place, then come back here. We test this particular, then break above and continue going. That's how the market will continue trending to the upside. If in case, I'm just saying in case, so I'm not prone, I'm not, we do dubious speculations here also. I'm just saying in case. So in case that happens, watch out for you'll not start seeing, supply shorts problems, economic problems, this, that coming out from data, the oil, there's no oil supplies, problems, this and that and that. You start hearing some kind of negative news that is making the demand for oil to go up. And sometimes I do feel like, do they even make all these things up? Or is it that, because how can you predict that this is going to go this way and it's going to go that way? And data that will be coming out will just be coming out so negative, too negative. So it depends. So this is even too much. This 5,000 pips is too much. Sorry, trying to take all these guys in. Hold on, I'll take them off later after the video. So if I can reduce the, what's it called, maybe 2,000 pips, that would give us how many risk to reward? Probably 2,000 pips. I don't know. Depends. $14,000. So 14 point, then we'll say 2,000 pips. 70. That's 15 raised to reward ratio. So if you put $10,000 into this, you know you are expecting at least 150 to $150,000 back. So it depends on how much you are putting as 15 raised to reward ratio. It happens. It happens because if this market is reversing from here, unless we are coming back here to find that resistance you saw, unless you are coming here to find resistance, and if I should bring something up again to show you something, you'll be shocked. It will be, that place is 0.5. That place is definitely 0.5. See how accurate? Exactly 0.5. So if we're going to break above, see how accurate this market is. Now 0.5. How accurate? I didn't even check it up. I know that's accurate. This market will travel all the way to probably $93. I get it before, even coming to even break down. So we have a trade. So you don't even need to take to 120. We have a trade. How? Because if we are coming back to retest this particular structure, know that we're coming to $93 or $94. What's it called? US oil before even finding a way to either break up or break down. So we have a trade. So my trade right now will be from $75 to $95. So I have a trade, $95. I'm sure of this trade right now. Come back 1 or 2 months from now, you will see this if you are taking this. So we'll have a trade on US oil. So this is what I want to talk about today, because the demand is going to go up until probably we get to 0.5. You can see this market never lies. It's you that you are the one not analyzing this market correctly, probably to your favor. Because from what you are seeing here right now, these values, Fibonacci retracement, is just one kind of a tool that gives accuracy in this market. The accuracy of Fibonacci is just too much. Are you getting it? Because if you see, this was where I was trying to go back to the 4-hourly chart to show you something. This was where the market actually did what broke out from. Are you getting it? It was where the market actually did what broke out from. So are you trying to tell me that they knew that this area was 0.5 before we even got to 0.1? Then on the monthly, what can you see? On the monthly, let's go back to the monthly. The higher time frame, what's it called, is more than the lower time frame. So on the monthly, let me take this off. On the monthly, this market is even telling you that I'm going back up. If I switch character to the upside, breaking out of this ascending triangle, descending triangle, and stopping at 0.5, use a Fibonacci trend extension to take this off. I'll tell you that US oil for the next 1 year or 2 years might be on a bull run if it continues like this. So look at, where do I usually tell you my first take profit comes at? 0.618, which perfectly aligns with this $145 area. So if I'm entering $75, I'm taking it to $145, even 1 barrel oil is $70,000. 10 barrels is $700,000. So I'm talking to all investors. This is how you look at the market. I just wanted to do this for you and how I use my fundamentals, my sentiment analysis, and all this news coming out from without emotions, all this news coming out from putting one and one together to trade this financial market. This is money. This is money. $700,000 in the Nigerian economy, which if we use how much we can that can buy us 10 barrels of oil. How much can buy us 10 barrels of oil? XTI. How much can buy us 10 barrels? One barrel of oil right now is $766. You need to have at least $7,066 to take this trip, probably risking $2,000 out of that $7,000. Are you getting it? To make about $70,000. How many? Less than 1 year, it might happen. Are you getting it? You are risking $2,000 out of your $7,000, which is 10%. This is 10%, right? Out of your $7,000, you are risking up to like 30%. As an investor, not a trader, as an investor, see how much you are risking. Probably that's why I say that is not. If you apply risk and money management and you're supposed to risk 5% of your capital, that means you are supposed to have $100,000 capital. Are you getting it? To 5% of that money is $5,000. You're never risking up to $5,000. So let's say $50,000. 10% of that money is. So sorry, what did I just say? 10% of $5,000 is $10,000. 5% is $5,000. You're not risking up to $5,000. You're risking $2,500. So you're supposed to have a capital of $50,000. Risk 5% of that $50,000. In case it fails, you can take on that long swing trade. Are you getting it? So you are risking just $2,000 to $50,000. That's just $2,500. That's just how many? What's it called? That's just about many percent. 2,500 divided by 50,000. That's 0.05. That's 5%. 5%, yes, 2,500. That's 5%. Have a $50,000 account. Take a one lot. 1 year later, you make that's over 100%. No insurance company will give you that. No bank will give you that in interest. Are you getting on your money you invested with them? So invest in yourself, invest wisely, risk $2,500 out of $50,000 or risk $250 out of your $5,000 to make about, if you're making $70,000 on one lot, you should be making $7,500 on 0.1 lot, which is $5,000. As an investor, you should know that you should be able to get your hands on at least $5,000, risking just $50,000 to make at least risking $50,000 to make $750 or something like that. That is how it works. So this is what I have for you on US for you right now. So what I'll be looking out for right now, if I should do a quick recap, is let me do a quick recap. Let me go back and do a quick recap. So on my I want my 4-hourly chart. So my 4-hourly chart on the mid short term, right now, if I should take all these Fibonacci trend extensions and the rest of them. On the immediate short term, I'm waiting for a retest. If I should take this off also, I'm waiting for a retest of this consolidation break that we've broken out. So I'll be waiting for this break to break out. Hence, that is making us retest, and we are not breaking it, and also switching probably on the 15 or 30 minutes or 1 hour time frame. I'm seeing a switch enter. So first take profit to be 88, 83 or $82, $83 conservatively, and second take profit to be $95. Before probably coming back to $83, we're not breaking it, they will take it to $125. That is the swing I'm expecting, or the position trade I'm expecting on US oil any moment from now. So I'll be uploading this video for anyone that cares to use this to add to user analysis. You can do your own research. This is my research I've done right now, and these are every asset I want to trade. So I'm a long-term trader. I'm not a greedy one. I don't care how long it takes. I'm building my future, and I don't want all those things that make me rush into as not even rush. Don't let me use that word rush. I don't want anything that I would do that I will blow up my capital. I will not have money to take on this because sleep and wake up, sleep and wake up. We are in July already. January we started this journey, uploading videos and to going professionally to see how we can build our future. Life is a marathon race. Don't run a sprint race of 100 kilometers per hour, get tired and fall off. You might die along the line. I guess it because if you take things little by little, observing proper risk and money management. I was talking about $50,000 right now. Some people will say that, oh, let me raise $20,000 and just this analysis is too perfect. I raise $20,000, I can make $1 million. It's possible. But what if you get taken out? What if this supply is just overnight spring up? You get taken out, you lose $20,000 out of $50,000. You now start reducing your risk from probably the 20 lots you used before to maybe 0.5 lots. How long will it take you to make your $20,000 back before you now start entering profit? Now you make your $50,000 back again. You take on that risk before you know time is gone. So use proper risk and money management. That's the best advice I'll give to you. Proper risk and money management. Know what you're doing. Then if you want to do trade this, if I'm you trading oil, look at it's there. It's there for you. Go to the lower time frames. Look at what is this? Double bottom. Market broke up, broke out of back into this what's it called support. We tested it again, and it has been uptrend ever since. Look at uptrend. So if you've been taking all these, if you have been taking all these trades, look at after this retest, enter, take profit, come back again to this demand zone. You found demand. Look at, take it again to the next. Fibonacci is there to help you. Look at, Fibonacci is there to help you. Take profit here again. Wait for a retest. So this trade, this market has been what? Trending on the 1 hourly time frame perfectly well. Look at now. It has been trending perfectly well. So we are seeing an uptrend. So I'm waiting for either a switch to the downside, and I can even take a trade out because the moment we are breaking this to the downside, I guess switching to the downside again, break this, switch, retest, take a conservative sell from $76, sell it down to $74, 200 p 2,000 pips. This is a trade again, breaking it down, retesting, or coming back to, I'll show you something else. There was something I was supposed to show you from the beginning. I didn't show you, connecting the dots. How? This was where it all started from. Just connect the first dot, extend it. You see that the market has been very, very perfect. So we are approaching this area that might take us to $74 before breaking it again. Now look at what has the market been using since the monthly time frame. A descending triangle is there. It's not, it will only show you a descending triangle. It wants to still use that same descending triangle again on the daily right now again. A smaller one. A daily right now again. So the moment we are breaking out to $83, retesting, I need to drive this properly for you. How do you trend your market? How do you trend your market? First of all, if that's a breakout, we know we don't go 0.3, and this is the way we're coming back. We'll come back to 0.370, 3.46 or 73.574, $75 conservatively. And the moment we're breaking out, we'll switch to the upside. So retesting, you enter from the fourth Elliott wave. Then take it to the next one. So you enter from 73.5 all the way to $795. That is how the market works. So one, do proper training on how the market works before you can trade. Because if there's an Elliott wave, let me show you how Elliott wave works. 1, 2, 3 always break a structure. You know, I usually say that. 4 comes back, does not break above 1, must not break below 1. 5, before you start seeing us doing what? An ABC move to the downside. A, B, C, we should usually break 3 a little. Then we'll start another Elliott wave again. 1, 2, 3 always break a structure. 4 cannot go below 1, or it might never come near. Then 5, that's how the market will continue. 2 might even come down a bit, but does not break. Are you getting it? As long as it does not break below 0, that's 2. So the market will continue trending using this Elliott wave. Do you know how many pips is from year to year, from year to year, from year to year, from year to year, from year to year? So this is how I expect you to take your market, because the one, a lot of people don't get involved in one. People like me and you don't get involved in one. Yes, we usually wait for what? 4, because 4 is the best entry you can ever find in the market today, as long as it does not go below 1. 4 is the best entry. And I usually tell people, no matter how long it takes, wait for 4, because 4 is, well, look for Elliott wave, and best traders of Elliott wave, they will tell you that wait for 4th leg and take the 5th leg, then take the ABC leg, then start your new Elliott wave. Then you know that you have a major support, then you have another Elliott wave coming up. And if you go to a weekly time frame, you will just see that this was just a proper way the market has been trending for you. Go to the 1 minute time frame, 1 hour time frame analysis right now. Drive the Elliott wave. You see how we're able to do a 1, 2, 3, 4, 5 ABC 1, 2, 3, 4, 5 to get where we are now again. That's how the market works. I guess that's how the market works. Before you know it, we are here already. So the market moves in waves. You need to learn everything and how this market moves. Look at now. See this support I even drew at 63. This market might just come back here. Are you guessing it? This video is very vital. All these videos will blow up someday. I don't care doing them. I don't care how long it takes me doing them. Data I'm wasting, people not watching it. Someday, I believe a lot of people will do it. Find this interesting. Are you getting it? And use it as a way of getting more knowledge into So this is what I have for you. I don't know. But this is a dubious speculation for now, but this is how I just want to tell you that this is how I look at my market and how I trend the financial market itself. So right now, if I should take all these guys off. Okay, sorry, let me take all these guys off now. This video is becoming too long. I should take all these guys off, or even take them off entirely because they're in the video already. Take them off entirely, and you see, what are you seeing? I guess this is another ascending triangle that if it breaks and retests, breaks and retests, continue going. This is how the market actually does work. So if you're a price action trader, if you're a short pattern trader, depending on your strategy, I've incorporated all the strategies, sentimental analysis, and what's it called? Fundamental analysis, technical analysis, more than 10 strategies in one place, more than 5 to 6 conferences that you ever learn from any mentor, anywhere, anytime, any day, in one place again. See resistance coming up here again. Many other things, support and resistance traders. You can even bring in your 20 EMA to see if it's corresponding. Look at my 20 EMA, we're looking above my 20 EMA right now. We break above it, we are on a rally. We break below it, we are down. We break above it, we are up again. Another strategy again, if you're an EMA trader, if you bring your 20 EMA, 50 EMA to accompany it, you see that the market was in an uptrend. We broke here. This was a sell entry. Now, if we're breaking above again, where the 20 is crossing the 50 again, like it did here, we know that we're in another massive uptrend again. Once we're crossing you know that you're in an uptrend, and you start seeing the 20 and the 50 becoming what support. Now look at 20 and 50 becoming resistance. So there are a lot of strategies. Just come, let's work, let's grow, let's trade together. So I'm not going to counter trend this down to the downside. I don't think I'll be doing that counter trend again to the downside, because the market might just continue expanding. From today is Friday and the market is closing today. The market might just continue expanding to the upside. So when you follow the trend, you will not lose money. You know that you will not lose money, you will not lose much. So look at another formula I brought out right now. 20 and 50 EMA. When 20 is crossing the 50, bull run. When 20 is crossing the 50 to the downside, bear market, bull market. So what is your style of trading? What is your strategy? What have you found for yourself? Because if you, even though you are not a chartist, just 20 and 50 EMA, see what it's doing for you right now. Bear market, until you break above it again, you leave. Before you leave, this is a lot of pips. From $41 till it broke below at $91. That's 50,000 pips. $50,000 on a one lot. 10 lots, $500,000. No matter how long it takes, it will not fail you. And if, why do you even let it to come? You are 120 already. Why do you let it break below? The moment you are breaking below your 20 EMA, you should get curious and look at market structure, knowing that this is double top. Are you getting it? Anything that is making us break below that double top, that's as in to confirm a double top, we have to break below the previous high to confirm a double top. Break below, retest, and continue going down. What is your strategy? A lot of people have a lot of strategies, working proven strategies, but they are impatient. They don't want to have wait for that time. They don't have that time to wait. They just want to make money every day. It does not work in this place. This is investing for you. Okay, so I will not say more than this. This is how I look at my market at VisionX. Little by little, we are growing, get there. We are not in competition with anybody. I don't intend to be in competition with anybody. This is my life. I know it's taking me a lot of time to bounce back because of what happened to me in my other businesses, but definitely we'll get it right someday. So this is what I have for now. And I'll be looking at this, I'll be driving the price action on this market and finding this particular resistance back to our 73, 74 area, I guess, in it. And without a break of structure to the downside, even though you want to take a swing to the downside, without a change of character to the downside, breaking this previous high, I guess, in it, breaking this previous one week low, retesting this particular 0.5 or 0.382, coming here to find entry for start going. I am not selling again. Okay, I'm not selling because the market might just come here and continue breaking this guy to the upside. So this is what I have for you. Don't look at your higher time frame. Use a lower time frame to drive the price action happening. If the 1 hour is too small for you, come to the 4-hourly. You can see all the price action happening. If that's too big, 30 minutes is there, 15 minutes is there for you to see what is really going on. I guess me. And I'll tell you from today, if you are the one kind of person that loses money all the time because you're looking at lower time frame, stay on your 40 time frame. Trust me, no matter what the candles are doing, it will save you trading from those 4-hourly structures. So this is the best thing I can tell you for now. I'm not a financial advisor. This is how I just for this video is just for educational entertainment purpose, and to document my journey as a trader. I guess, and so this is what I just have for you. So I advise that you trade responsibly and trade wisely. I guess, and because here right now you can see our further structure, previous resistance. So we might just come back here, expand to $78 before falling down, continue going. So trade your further structures and you only be profitable. Take care and bye for now. Bye. Bye. Bye bye.